Oil's rally has come to a halt even despite bullish industry data. The ruble is trading almost unchanged against the US dollar, but continues to aim higher. The target of 73 rubles per dollar seems unreal at the moment. The rally in the energy market is losing its steam and oil quotes have slipped into the red. However, the sell-off wave has not started yet. The prices may still rebound. Lately, oil has been slightly declining at the beginning of the session, but then it resumed a growth later in the day. At the same time, the market looks overbought now, which implies a downward correction. Meanwhile, fundamental factors remain favorable for the crude prices. Investors expect to see the approval of a large stimulus package in the US. Besides, the coronavirus situation is slowly improving thanks to the intensified rollout of the vaccination program worldwide. There is a glimmer of hope that the pandemic will soon be defeated, which will definitely boost fuel demand recovery. In the European session, Brent was trading just above $61 a barrel. WTI crude was following a similar trajectory, with its nearest contract holding at $58 a barrel, just as in the previous session. Brent is expected to stay in the range between $60 and $62 a barrel, although the market is losing an upside momentum. The general background is favorable today, as major US stock futures are trading in positive territory. The release of the data on Consumer Price Index in the US may significantly change market sentiment. Investors are also waiting for weekly inventories data from the US Energy Information Administration. A draw in oil stockpiles will support crude prices. The bullish report from the API showed that oil inventories in the US dropped by 3.5 million barrels last week. However, traders did not react much to this news. In the meantime, the Russian ruble has been going through volatile trading recently. On the one hand, there are plenty of bullish factors for the ruble, including lower risks of sanctions and rallying oil market. However, the dollar-ruble pair cannot break through the strong support. Yet, the Russian currency displays a slow but steady uptrend. The ruble bulls managed to push the US dollar down to 73.70 mark. As a result, the greenback lost 0.2% in today's session. Yesterday, the ruble advanced by 0.5% against the dollar, having broken below the level of 74 for the first time in weeks. The ruble benefits from a weaker US dollar. The greenback is losing ground across the board after an impeachment procedure against former US President Donald Trump has been launched today. On the positive side, positive comments from the International Monetary Fund gave hope to the ruble buyers. The IMF praised Russia for measures it took to fight the consequences of the pandemic. The dollar versus ruble pair is expected to settle near the lower boundary of the trading channel between 73 and 75. Then the ruble may attempt to move higher. However, this trading range will remain relevant in the coming sessions. This week, local markets are looking ahead to the policy meeting of the Russian Central Bank. Market participants do not expect to see major changes, but they will try to find out the future steps of the regulator. At the same time, the IMF called on the Bank of Russia to cut its key interest rate by 0.5 percentage points. And that's all for now. Thank you for watching and stay tuned.